Hello everybody. Thank you very much for coming here. I think this is the best slot for a panel discussion because a lot of people are very hungry and they won't sleep or doze off. And our speakers won't encounter a lot of sleeping Joes here. So, let's start with some imagination. If I ask you, to imagine a CFO, most of you will think a CFO is the one who is always saying, oh, there's no budget, or the one who is simply preparing the financial results of a company. But that is not how our regulators like RBI and SEBI sees a CFO now. For them, CFO is more of a strategic person who has to understand the best practices and to create that shareholder value. So with this thought, I would like to bring in our panelist here and start the discussion. So we'll start with Mr. Suranjit Mishra. When it comes to regulations and compliance, isn't it very easy these days? Everything is, jotted down, charted. You just have to, it's like a checkbox thing now.
Yeah, so thank you for giving that opportunity. So I would start to say it's easy in the sense, if I break down the compliance, I would say there are two types. One is the routine related compliances, report has to be given, some compliances has to be completed by date, and so we call it as a daily management issue. So a lot of automations and digitizations, and we should ensure that those compliances are being done. But the challenge is those compliances, particularly when I come from the energy sector, I know that a lot of trends, a lot of compliances which are going to affect the core business of the company. And there the role of CFO, I think that that's become more critical because it's may not be important now, but if it is not handled properly today, it's going to affect the future profitability, cash flow, even the survival of the company is also at stake. So I would say it's easy. Some part is easy, some part is difficult. So that's the way we have to play it out.
So do these requirements of, governance requirements and reporting requirements for the RBI and SEBI, do they really steal your sleep at night? Or is it to you only, sir?
Not likely. The way I think we operate at Tata Power Delhi distribution, which I represent, we are closely track the regulations in a sense that we follow 3 mantras while handling the regulatory piece of it. One is that we involve a lot of advocacy, that we ensure that we deal with the stakeholders, we deal with the government, we deal with the influencers on a regular basis to see that if we want some regulation changes that would be benefiting to the customers, and then we enable that by creating that environment, and we deal with the governments. And then maintain a transparency, because now with the digitizations, we know that we have to be transparent, we have to be ethical in whatever we are reporting, and we give a lot of priority to that. And then oversight. I think the last one would be oversight. So we have our internal checking mechanism to ensure that though we enable the transparency and the culture, but at the end of the day, we have to have a strong mechanism by which we see that things are actually happening on ground. So mostly process takes care of it, and also at something we strategically and take care of it.
Okay, so he's saying at Tata Power, process takes care of a lot of things. But I want to go to Mr. Rajeev Mantri, who's a CFO of Citi India here. I think Citi has a business in financial space which has been disruptive for many years, So I want to ask him, what does keep you on your toes? It is the expectations of the CEO managing the shareholders, or it is the compliance and regulations?
No, thanks, Palak. I hope everybody can hear me. I think CFO's role has evolved significantly, right, over a period of time. And, we're not just people who take care of accounts and finance and stuff. it's really about managing various kinds of risks which are there in the organization, right? So it's a pretty broader remit. I think the landscape that a CFO sees is pretty similar to what a CEO sees, right? And I think that's where the CFO becomes an apt business partner to the CEO itself and a right strategic advisor as well, right? So I think the role is pretty broad. The role really requires you to have a franchise view on various aspects, right? Looking at what exactly would be the key risks to the franchise, what would be the key opportunities to the franchise, and how do we maximize the opportunities and protect against the risks, right? But to your point about compliances, of course, that is a key aspect that we need to look at. Being a banker, I think we are a pretty regulated sector, and I think there are tons of regulations, RBI being a key regulator, but we have SEBI and various other regulators as well. It is important to be aware of all the various regulations that affect, the organization, and what kind of changes and what kind of trends are coming through within that, and being completely on top of that, right, in terms of how do we manage that. Especially, it's a pretty global world nowadays, right, and every organization is interconnected across the borders. So therefore, it's not just the risk emanating from the country, but also global risks, right, that need to be looked at. So absolutely, I think that is a paramount focus.
But CFO is, you said it's more like, CFO is similar like a CEO. But then I would like to say that CFO is the first casualty when something goes wrong. So what is the kind of pressure you are under that time?
Yeah, no, absolutely right. I think at the end of the day, financial risks are the most important risks.
Nobody cares what CEO says that time. It's only the CFO that everybody wants to, everybody is looking to hear them when something is going wrong. Like SVB Bank, the CFO has been, class action suit has been filed against the CFO as well.
No, you're absolutely right, and I think CFOs do play a very important role in that aspect. I think at the end of the day, every other risk manifests itself in the form of a financial risk, right, or a financial impact. And therefore, who knows a financial risk better than a CFO, right? And I think that's why it is the time of the CFO, is what people say, right? It is important that you have good amount of line of sight in terms of what are the various risks which are coming through, and how exactly those can be prevented. And therefore, CFOs play a very important part, right, in terms of managing that. You absolutely rightly pointed out the SVB example. I think this was a case of sudden surprise that came through to the market, right? And there are clear indicators that could have been looked at, right, at an early stage. And those kind of indicators could have prevented that kind of
there were clear indicators. More than sudden surprise. It could have been surprise to the common people, but then those who are in the financial markets, was it really a surprise? Something like a...
No, not really. So I think those indicators are well known, and people should have been able to manage it out.
If you can give some idea, what are the parameters that you look at first, to avoid that kind of risk?
Certainly. So let's say, talking about the banking industry, I think liquidity and capital are the two key paramount aspects, right? Liquidity risks are the ones which actually choke an organization even more than compared to even capital risks, right? And there are regulations which have been tightened around that space. You have Basel III related regulations, you have liquidity capital ratios and various other things, right? It's all about how in a stress situation the bank will perform, and there has to be a very clear line of sight to be able to look at that. So I think that is something which every banker should look at, and every organization also looks at. There are certain triggers which are clearly ignored in this case, right? And I think it's important to be able to recognize that these regulations do play an important role, not just in the form of a form filling kind of an exercise, but in terms of really helping you manage those risks, right? What is the kind of risk appetite everybody has got, right? Every organization has got, that needs to be defined. And then how you actually make sure that you're within the risk appetite, how you are making sure that you actually track and monitor your bank's performance or your company's performance, right? In terms of being within those risk appetite and risk parameters becomes very important. I think that is a key lesson that comes out from any such saga, be it SVB or be it any other situation which happens. Like the whole 2008 global financial crisis which happened, and there were a lot of tightening which came through after that in the right way, right? At the end of the day, the regulations do look at how do we make sure that the various organizations are protected, safeguards are created, and every organization then moves forward with eyes wide open on the kind of risks that are coming through, right? So I do see it as a positive development, right? When people do take learnings from that, and then try and implement it, right? And CFOs, to be honest, are really the ones who spearhead, right? Making sure that that compliance is in place.
Thank you, sir. So key takeaway is that you have already said, like he said, there are processes. You're also saying you have set those risk parameters which you have to look. So I would go to Mr. Bharat Agrawal, Director of Finance, Diversey. It's a growing company. So I would like to ask him, you know, CFO for a company like yours, which is coming up, you know, is expected to paint a picture of a business and translate financial data into meaningful commentary, trends and actions. But when some episodes like PwC scandal, you know, happen, they have often taught us that there is too much of reputational risk to business, you know. So what is on your mind when you're making those projections and financial commentary to the world?
So if I talk about Diversey, we are a 100-year-old organization, but at the same time, as you said, we work like an entrepreneur. So that's the entrepreneurial spirit, I guess, most of the organization in the country working right now, right? We heard from Mr. Tyagarajan as well. We're going through a globalization, but a localization. So there is a lot of inward looking that's happening in the country across the organizations where companies are looking at more in terms of make in India or make in any other country you operate in. Similarly, there is a digital drive push that you see across functions. It's not only finance. You look at any function, any business, any stakeholder, they want to have that paperless experience, right? And the third thing that comes on the top of my mind is the ESG that we all talk about. And it's not just a talk, it's a reality now. So with all these things in mind, right, now the numbers that we speak, now the way we look at everything is very different. It has to be now measured in terms of, for example, we produce chemicals, we produce machines, which help in keeping, so the premises you currently sitting right now is being kind of cleaned by our products. So we always kind of, look at the numbers in a way where it gives us returns in terms of the green investment that we do. So a lot of investment happening in the space where we come up with the innovation. So we have a team of R&D, 35 scientists who continuously keep innovating in this space. So as a finance, I guess the numbers are now talking more story in terms of how we contribute to the green carbon emission or how we kind of lower down on that. At the same time, right, a lot of regulations are changing all around. So I take care of the South Asia market, which includes around 7 to 8 countries. So you look around the India, all the neighbors are going through some bit of turbulence in their countries. So how do you make sure you keep a very close watch on the developments happening in this countries? So all those things become very important when I just present a number or I give a meaningful message to the numbers when I speak with the board.
So is there any pressure for you to be very conservative or give out numbers that will enthuse people to look at your company?
So I guess
I mean, that's the case most of the time in financial markets. You're coming up with quarterly numbers every time. So CFOs want to be conservative, but then the management wants to be, oh no, we got to put this picture across. So is there that pressure that you always face?
That's a situation. But again, looking at the reality of India, where our GDP is going to grow at 6.5%, I'm sure no company is looking at a growth which is less than 2 to 3 times.
Anybody from your company sitting here, management?
No, so see, I'm sure, and I can talk about my company, I can talk about the community I kind of, the finance community I talk with. Most of them, right, businesses are expected to grow at least 2 to 3 times of the country's growth that's going to happen in the coming year. As a CFO, how do you bring the vigilance, how do you bring the credibility to that number is what I would say my job is. Whether it's 20%, 15% or 10%, how do I make a good due diligence to arrive at a credible number is what is expected from me.
Good. We'll go to Mr. Prashant Thakar, CFO Director, Suvidhaa Infoserve. We were just chatting outside before we came here. So Mr. Prashant Thakar was of the view, oh, everything is so good. Things have turned so well in the past few years. It's been automated process. And so I would like to ask him, what does the rising cost of compliance really concern you? And in this scenario, how do you optimize business without compromising on regulatory requirements, and what role does technology play?
No, so definitely I would say, the cost is something has definitely grown up. Looking at the kind of complexity the compliance has brought in over last 1 decade, I would say. The more than anything else, I guess, it is an improving index, definitely helping organization to be, more vigilant and doing it. But, as far as cost is concerned, if you see, that can be rationalized by, using technology. So I'll just give you one small example of, the AI. So the way, in our organization, we use an AI, artificial intelligence, into many, regular mundane tasks. So, the compliances are primarily been divided into, the way I look at it, that, it's a one-time compliance and there is a lifetime compliance. In between that, there are time-based compliances and event-based compliances. So, the one-time compliances are easy to sort out. You just, invest your time into it and, do it just like registration of company or acquisition, due diligence and all of that. And lifetime compliances are again easy, because then you just have to maintain the register and you have to just give it to someone that, okay, this is what you need to ensure. Like as small as like, displaying the board into a vernacular medium and a English medium outside your office. That's like a lifetime compliance. You cannot, even, get that some addresses have just got misspelled, or, it has just gone wear and tear. Most importantly is when it's a time-based compliances and the event-based compliances, in which the AI, in the time-based compliances, AI, gives a real help. So what we have actually done within our organization is, as we are the fintech company, so, whenever there is a technology team which has little buffer, we keep doing all this experiment. So there are master datas of all the informations of the company, which gets replicated into various forms, various data. So like, register of the members, register of, so we have like 54,000 shareholders. So whenever you have to give some information about the shareholders or the information about the directors or the KYC, they're all available into a repository. So when you click into any of the forms or any type of regulatory compliances, they're all like auto-filled. So rather than somebody going and, scratching his head that who is the director right now, when did he resign, and, opening up all those Excel sheets and all of that, and investing or rather wasting his time, I guess that has been, taken care through technology. That has actually helped us optimize the cost. But in my experience over last 1 decade, definitely cost is like now 2.5x of what probably I would be, incurring 10 years back.
But what if we go by what you are saying? Can we say that few years down the line, I mean, a CFO would be threatened of losing his job because everything is automation now? I mean, is there any such thought that comes into your mind, oh, everything is just being, process driven and automation, and your relevance is not there?
No, I would, the way I probably look at, the role of CFO is, and exactly, you asked a similar question that, CFO being the first casualty. I would say it's a game of a business running a business is like a game of chess. You are like a queen and you have to protect a king. So before king dies, obviously queen has to die.
Is the king shareholder or the management?
You put any, the king is either a shareholder if it's an, a public listed company.
It can be one.
No, not really. It changes as the, organization keeps changing. But CFO is always a queen. So, before anybody attacks to the king, CFO always have to ensure that that's the first casualty before, a checkmate happens.
That everybody else will ensure. CFO doesn't have to ensure that.
No, exactly. So that is the reason why, the biggest thing is, while the way we play in the chess, the job of a CFO is not only to ensure that it protects the king, but also protects the entire game by ensuring that the key players and even the smallest of the player needs to be protected, by ensuring that everything is taken care, not on time, but every time, right? And that is a reason why I probably call compliance department in our organization is a ceiling fan, right? And just to come to that analogy, why I would say ceiling fan is the ceiling fan. When you switch it on, you need not have to actually watch and keep eye on it, saying that it is running or not. compared to like a pedestal fan where you have to keep ensuring that it turns the air onto you. At the same time, then you will tell me that new technology, why the split AC is not allowed. I would say split AC are very costly, so there the cost is there. But the ceiling fans are something which keeps running smoothly, keeps giving you air, and it keeps helping you keep running the business.
It's a wonderful way he's simplified into ceiling fan and a costly air condition, and that's what a CFO is. But I would like to bring some important statistics, which is going to pinch you all, I think. So there was a report by KPMG Forbes together, where the report was titled "View from the Top." Some 549 top executives from 6 continents were surveyed by KPMG and Forbes. Almost 1 in every 3 CEO is worried that their CFO isn't prepared for the challenges. So they don't have the skill sets, to fight today's challenges that are coming like waves, scandals, regulations. So what is it, the skills that CFO lack today to gain that confidence of top management and of course shareholders? If anybody can, if you can, Sir Suranjit ji.
Yeah, my take is on
Sir,
that.
one second. Tata Power is Tata's culture, as a journalist for 20 years I've seen, is a very easy-going culture that I have seen. So I don't think he feels the pressure that we can just see it.
I would say that's changing now. At some point in time, people used to remind that you are not a government company, you are a private company. So, but those things are now changing. I understand as a CFO, I would say that my understanding about the business acumen, finance is the functional domain. I'm supposed to expect it to know. All CFOs are expected to know that. But understanding of the business, that's I think is critical to appreciate that how the businesses are being changing. So I spend time to participate on the business reviews and not much to present, but probably I go through a lot of reports and ask certain questions so that I get myself updated about what's happening around on the technology, what's happening around on the customer side, what's happening on the commercial side of it, and then all those inputs can be taken to take a decision when you are taking the financial decisions, because financial decisions has to be a culmination of all these inputs to see that whatever the projections we make and what are the plans we make, that takes into account all the reality and reflects the true position where the business stands today. So that I think is quite critical, and if it comes out in the survey that CEOs are having those views, probably that's right. I mean, unless and until the CFO really understand the pulse of the business, it's very difficult. Just the finance domain knowledge is not going to, I think, help much.
You want to come in, sir? The Citi's view on.
No, I think I would say it's time that the companies invest in the CFOs, right? Okay. So I think CFOs do play a very important role, like as we had discussed. So I think to your question, I would say one, like what Suranjit mentioned about the CFO spending time to understand the business and the business drivers. I think equally the CFOs have to spend time to get the external perspective, right, and external lens. There's a lot of time when CFOs actually spend a lot of time internally looking at the organization, looking at the cost structures and various other things. It's equally important for the CFOs to spend time externally, understanding the various risks that are coming through from the external world. It's a very dynamic, like we say, it's a VUCA world, right? Volatile, uncertain, etc. And I think it's important that not just the CEOs, but the CFOs also have a very good pulse on what's happening in the external world. Regulations are changing very rapidly. Risks are emanating very rapidly, and I think that's an area that needs to be focused upon, right? So, and I think that will answer a large part of your question. As the CFOs start taking great amount of focus on the external world, understanding the risks, and the organization investing in the CFOs, right, on that front.
See, my 2 cents on this is, like we have gone through an unprecedented time, right, in the pandemic. Currently, we're going through an unprecedented time in terms of the changes happening all around. And whether it's a CEO, whether it's board or any senior stakeholders, right? The expectation from the CFOs is to kind of take care of everything, right? From what's happening in the plant to managing the regulatories, everything, right? So that's where I guess, apart from investment piece that that Rajeev talked about, reading piece that they talked about, I think what can do well with the finance community or CFOs is to definitely read, because things are changing. Read, listen, and be vigilant in terms of what's happening all around. Raise these points in the forums you are present, because most of the time we believe that it's my responsibility, it's finance responsibility, and they just get stuck there. In any forum where you are present with the leadership team, it's important to raise these points, because some of the time we may have a blind spots in terms of however market visits we do, but there can be spots which we are not able to see around. So read, raise, and third thing which I would like to leave here with all of you is make people responsible. As the CFO, we are accountable to the world to make sure the numbers are presented in with the most integrity. But everyone in the organization is responsible for the compliance, right? When you draw a RESI matrix, you can take the accountability of it, but responsibility lies with everyone. So these are the three things.
I'm sure audience sitting here will agree that a job of a journalist is most difficult. And that of CFOs is very easy. They have systems, processes, and everything is set. While for us, nothing is set. We don't have any process to be followed, any system. It's just at night, we have to be awake. So anyways, that was on a lighter note, but I would like to open the floor for questions. I'm sure there are a lot of bright faces who want to, ask some questions to CFOs. Let there be some difficult questions. Sure. Can we have the mic there? Can we have the mic there? The gentleman sitting there.
Yeah, hi, my name is Thakar and I'm a CFO at YOLO and I am an angel investor as well. My question is to Prashant Thakar. World is heading towards the AI. How to allocate funds in future? Yeah, hi. My name is Thakar. I am a CFO at YOLO and I am an angel investor as well. So my question is to Prashant Thakar. When world is heading towards the AI, how to allocate funds in future innovations? And further, do we have any benchmark for this specific segment?
So when it comes to allocation of fund, I guess technology always takes a superior bucket, because that is the one which solves all the problem of, I guess, all the department. So AI, maybe the people are saying that it's going to be future and all of that. I don't think so there is any investment to be worried about to start with. I guess it's still in an experimental stage, just like when some decade back the Xerox machine got invented. It is just like that as an AI. Everybody's talking about it. Nobody really knows what it is about, and everybody's using it to their utilization. I've also seen my kid using an AI to generate one 3-minute video for his school project, or rather a college project. So it is like based on people. I think so it is still a time. Companies cannot be dependent at this very moment saying that, oh, we will be dependent on the AI and we'll do some future planning. I think so time is still there. But yes, experimental things are already on. Everybody's experimenting. And finance, obviously, as I said earlier, what CEO doesn't want to do, everything has to be done by CFO. So yes, the budget allocation and all of that is all CFO's responsibility.
Thanks, Prashant.
Any other question? Really? You have the CFOs? Yeah, I think he's saying we are coming between the lunch and... So fine, let's just... Yeah, sure. Can you give the mic there?
Hi, I'm Monish Advani from Capgemini. I'm a solution architect. So I just wanted to understand the cloud investment which CFOs, you as CFOs are thinking of, because majorly it's an multi-cloud setup these days and a hybrid cloud, meaning an on-prem and a cloud setup, right? So coming next might be 4-5 years. How do you think the cloud investment in the Indian market, right, would be shaping up? Anyone answer?
Saying how the investment in cloud systems
Cloud
and all that.
systems.
Yeah, so I'll tell you, we the early adopter of the cloud, and I'll tell you, being a fintech, obviously we had, we've been doing all these experiment. So definitely cloud, but the, the biggest thing, like I'll just tell you the backdrop story. There is nothing called as cloud. Like, when you say my data is on the cloud, I think so there is nothing. So I think so that myth, I want to just bust it. There is always a server which is now then created into the cloud, and we feel that our data is in cloud. What I guess the cloud gives a flexibility, and CFO love that, as an, I personally love cloud. The only thing is it gives you a flexibility to keep increasing and keep reducing as your organization moves, and it has a direct impact on your cost. So look at it from a 20-year back. I just have to invest into technology, a server, and the full racks and all of that as a fixed cost. Now I have moved to a variable cost. So I'll tell you, in the season of Diwali and all of that, our business is like always 12x or 13x kind of thing. I need not have to worry about preparing 3 months before or 4 months before. I'll just be like sitting there and keeping my cloud agencies to be like, okay, be ready. And I'll just keep like, the way you switch on the button and keep increasing the regulator of the fan. It is just like that. So that's the only beauty of it. So it is going to be increasing day by day is what my view is.
Citi likes to keep a lot of data on cloud?
To what you're saying, I think cloud has definitely multiple advantages, right? So one is the whole cost of storage, etc., comes down significantly. The second is there is a lot of perceived risk with using cloud, but that's really perceived, right? In reality, it actually offers you greater cybersecurity because of the expertise which actually goes behind it. So I think it's a great way forward. What will be key is how the regulators, especially the regulated industries like banks, they perceive it, right? Are they comfortable? Are they comfortable with banks actually using it, right? And like they say, a car is driven faster when you have a brake in the car, right? So the regulators needs to get their arms around it. They need to understand, what exactly is the whole thing, and then organizations can actually adopt it much faster. But clearly that's the way to go, right? In terms of improved cost as well as greater security.
Regulators are always behind the curve, don't you think? I mean, organizations are always faster to adapt technology, to understand. Do you face this problem with the regulators? Oh, they don't understand, and what is this? I mean, we want to move ahead.
No, I think it's a very valid point. To be honest, it is also very clearly our imperative to make sure regulators understand the new tech, right? So let's say artificial intelligence, let's say blockchain, let's say the whole cryptocurrency, etc. The regulators are getting their arms around it, and I think the faster they move is the faster the industry can move, right? So it's very important that the regulators get their things around it. I think they're moving fast, I would say.
Sir, what is the mindset at Tata's? Do you do it in a very traditional manner, or you're also bent towards, getting a lot of technology into play to manage your finances in CFO's job?
In fact, if I talk about my company, so it's all about technology reaching the customer. So we put a lot of emphasis on the OT side also, operational technology, and also the IT side. So it's the integration of both OT and IT. That actually makes, I think, the whole feel of that, infrastructure, IT, technology to the customer. For example, the smart metering, and that using those smart metering to give those insight into the customer about their, energy optimization plan. Or we talk about a finance process like decapitalization. So mapping all the fixed assets which, for a distribution companies are all lying on the parks or the footpaths, and to the fixed asset register in SAP, so that any maintenance changes happening, so immediately it get affected, reflected in the SAP, and then, those reports can go to the regulator. So both OT and IT, I think that's the way we focus both side of it. and I think artificial intelligence and the cloud. So those are the new thing coming. So that will, I think, will add to what the integration is already happening. So all, I think, keeping the customer on the focus, we see the technology side of it.
See, cloud's gonna grow. There is no doubt about it, because the way you see the digital push, most of the things will come on a server, right? But what the concern that I see here is regulators, as you said, right, running behind, in the sense that there is a ask that all those servers should be based in India. You talk about Amazon, you talk about any other cloud service providers. There is a regulation now that they need to find a way to place their servers in India. They need to have in the systems, they need to have the trail available for all the transactions that happen. So all those things somewhere will create a bit of a disturbance or a disruption for the companies working on the cloud as of now.
No, why? What is the problem in having servers in India?
Most of the places as of now don't have it, right? So they have to probably either find a way where they put a server here, shift everything here, or probably kind of, liaise with regulators to bring a change. But if you don't do that, from this year onwards, your financials will be qualified by the auditors. So all those things gonna come our way as regulators learn, right, what's happening in the gaming space, right? All of us know. So all those things can be a disruptor.
Right. So any other questions, or we'll? Yeah, sure.
Today we have
your
the
name.
my name is Tyagarajan. I work for a company called Vayana. We are a supply chain financing platform. With the concept of private cloud coming in today, when a lot of banks are also having their own private cloud, do you expect the regulators to still push back on the cloud concept? As CFOs, I would like to understand, is there any major concerns you have as far as cloud is concerned? In terms of security, in terms of breakdowns or something, because we are a hosted platform on cloud, and till now we have had 99.99% uptime, right? But as CFOs, I would like to hear from you, do you have any major concerns on cloud?
So maybe I'll start, and then fellow panelists can join in. So I think let's take a step back, right? Regulators, if you talk about banks, they actually have a lot of restrictions and rules even around outsourcing, right? So they generally want banks to do most of the stuff in-house, and they really look at with very threadbare what kind of stuff you're actually outsourcing, right? So it starts from there. Also, as we discussed in the previous question, it's about them becoming comfortable with the risks which are emanating from this, right? Why they're uncomfortable with outsourcing is the kind of risks which are there. Will you have the same level of standards that the banks have internally, with the service provider? Is the same thing with cloud. Ultimately, it's nothing but a product which is being provided by a service provider. Would the person or the organization have the same level of controls, right? That's there. If you ask me, I feel definitely comfortable with that, because A, you're getting the benefits of scale, you're getting the benefits of expertise of that particular area. How much can you keep creating capabilities within your organization, right? It is a world where you have to tap into expertise that's available. And it's that kind of a flavor which the regulators are also getting their arms around and trying to understand. They do have very strict and stringent requirements, but it's really about them becoming more comfortable with that. So unfortunately, in the banking industry, while we may be very comfortable, we need to make sure that the regulators are also comfortable around that, right? But it's getting there. I think it's definitely becoming a lot better. It's a journey across any kind of new age products, new age technology, etc. It's a journey of making them comfortable around that, right? And then they also come up with standards and rules and regulations around how exactly that needs to be looked at. So it's a journey, but definitely becoming comfortable.
Yeah, sure.
So, I'll just add to that, saying that, the regulator, if you see in general, the regulators are always a proactive in following the trends, but very reactive when it comes to an implementation of any rules or regulation. We have many examples like cryptocurrency, and, even going back 3 decades or 4 decades back, opening up an, foreign organizations or foreign company, FDI route. So prior to that, if you see, today we are able to talk so nicely. In 1990 or 1991, if somebody has to speak about, Coca-Cola coming and opening up a factory in India, no, boss, kaise hoga? It will not happen. But now it's like, somebody coming outside and opening up a company is like people are creating vibrant Gujarat models in all the states. So regulators are always watching. Like if you look at what's happening to the gaming or a cryptocurrency or anything else, I think so the cloud is closely watched space. Only thing is, I guess what is happening is this war situations of Ukraine and now the Israel, always that worry of having a data sitting outside your country has always been there at the regulator's mind. I guess if that worry gets checked out as to how do you have an access to data instantly in any kind of situation, I guess I feel regulators are overall not having any other concern as far as clouds are concerned. They are like very happy saying that because it is going to be bringing the entire cost of any servicing or any kind of cost for an organization, which will like easy for them to take care. But barring aside this concern, I think so there are not much other concerns at the regulator end.
So I think we'll close it here. Thank you everybody. I think we had a great session and the panelists were great in answering all the questions. Thank you very much.